Today's geopolitical story is really about one thing. The world is being forced into a multipolarity where every major crisis is connected to that shift. From U.S. China competition to the Iran war, from supply chain security to the rise of economic nationalism, the global system is intentionally under pressure on every front. Part 1. U.S. China strategy. Washington and Beijing are still locked in a high-stakes contest over trade, technology, Taiwan, and access to critical minerals. Analysts are calling 2026 a year where the U.S.-China relationship could either settle into a fragile stability or snap back into a more open confrontation, especially as tariff truce terms and tech restrictions remain unresolved. The alternative perspective. The public sees summit talk and trade headlines. While a deal is likely already in place, the only fight left is over who controls the financial plumbing of the global economy and which companies survive the new regime of state-backed competition. Part 2. The Iran War and Hormuz. The Iran war remains the biggest immediate destabilizer in global markets. Recent reporting says concerns over the Strait of Hormuz are severe enough that chief economists now see a prolonged closure as a shock comparable to the pandemic in terms of supply chain and inflation consequences. The alternative perspective. This might be on purpose. The oil companies are having record profits. Energy choke points are now political leverage points, and the public debate around peace, escalation, and shipping lanes is distracting from who absorbs the economic fallout. Part 3. Markets and inflation. Oil, food, and shipping costs remain highly sensitive to any new movement in the Middle East. Even when markets briefly stabilize, that calm can disappear quickly if there is fresh tension around Iran, the Gulf, or the Strait of Hormuz. The alternative perspective. The market reaction itself is the main part of the narrative, because volatility is now a geopolitical weapon. Every rise and fall in oil or shipping costs redistributes pressure across consumers, governments, and industries in ways that favor some actors over others. Part 4. Europe and China. Europe is increasingly caught in the middle of this shift. The pressure from Chinese overcapacity in sectors like EVs, solar, wind, and mature node semiconductors is forcing European governments to choose between market access and strategic protection. The alternative perspective. That tension is really about whether Europe remains an independent industrial actor or becomes a reaction zone, forced to follow rules made elsewhere while trying to preserve just enough sovereignty to look autonomous. Part 5. Israel continued bombing of Lebanon. Israel continues to pound Lebanon with airstrikes and expanded ground operations, keeping the northern front hot even as broader ceasefire and diplomatic talks struggle to gain traction. That matters because every new escalation in Lebanon raises the regional risk premium and keeps pressure on energy, shipping, and investor sentiment across the Middle East. The alternative perspective. A more skeptical reading is that sustained conflict in Lebanon is not just a battlefield story, but also a way to keep the war with Iran going, expand Israel's power, influence, and defense priorities in ways that powerful actors can anticipate and profit from. Segment 6. The coming IPO wave. At the same time, the market is looking ahead to a busy IPO calendar, with names like SpaceX, Anthropic, and OpenAI appearing on the upcoming list. That gives investors another reason to watch whether geopolitical volatility is starting to hit risk appetite or whether capital is still willing to look past the chaos. Alternative perspective. From a systems angle, these IPOs aren't just big tech listings. They look like part of a broader financial reset where AI, data centers, and defense-adjacent infrastructure are being used to justify gigantic valuations and funnel capital into a system that's already under strain. SpaceX, OpenAI, and Anthropic may be treated less like ordinary companies and more like strategic vehicles for pumping liquidity into a new industrial order, where the IPO itself helps reprice the market, attract fresh capital, and keep the AI narrative alive, even if the underlying economics are fragile. Part 7. The bigger picture. Across all of these issues, the pattern is the same. Alliances are becoming less stable. Economic policy is becoming more political, and the line between business strategy and national strategy is disappearing. In 2026, The world is not just dealing with isolated crises, it is dealing with the collapse of the old rulebook.
The alternative perspective, from a systems view that collapse is not accidental. It is what happens when power consolidates. Information gets centralized, and the public is asked to accept that every major disruption is just necessary for the next phase of the system. In closing, across all of these issues, the pattern is the same. Alliances are becoming less stable. Economic policy is becoming more political. The line between business strategy and national strategy is disappearing. In 2026, the world is not just dealing with isolated crises. It is dealing with the collapse of the old rulebook.